I'm so glad you're with us on the Clank Howard Show, where it's about you learning ways to keep more of what you make. Coming up in today's Clarkrageous moment, after the horrific flooding in Louisiana, one lawmaker wants to regulate heroes that are serving others in a natural disaster. Wait till you hear this craziness in today's Clarkrageous moment. And later, there's a new credit card that's out in limited release that's for people who don't have good credit that I hope is a real opportunity for people to make money and offer a better product than the awful, horrendous, atrocious payday loans. I'll tell you how it works and how, if you were someone who needs something like this, how you would apply for it in just 30 minutes. I just mentioned that in today's Clarkrageous moment, we're going to talk about the flooding in Louisiana, and our contributor at Clark.com, Ashley, has written a story about the effect on small businesses of a disaster and what happens to you if you're an entrepreneur, you've worked hard to build your own business, that after a disaster, according to FEMA research, 4 out of 10 small businesses never reopen. Never reopen. The people in Louisiana that have been mostly ignored, it's almost like an afterthought in the news because they're not in a big media center. They're not a place where it's more remote. It's not easy for reporters to cover the story. And so out of sight, out of mind, and people are not really aware of the enormous suffering. Kids not being able to go to school, people not having a place to live. I mean, it is a brutally difficult thing. Imagine you're a business person and your business was ruined and your home was ruined. I heard a media report yesterday interviewing someone that had been hit with that twofer. So it brings to mind something I haven't talked about in years, and I love the way Ashley wrote this up, is that you as a small business person, busy with day-to-day, you don't have the ability to do all the contingency planning that a big company does. You know, in the aftermath 15 years ago of September 11th, corporate America went through very expensive and extensive planning so that in the event of a man-made or natural disaster, there would be backup plans. It led to Wall Street dispersing its workers all around the country is one of the things they've done. And then it turned out it saved Wall Street money. It wasn't why they originally did it. In your business, with the demands on you each day and not having a team of people you can have doing contingency planning, you just need to do some relatively simple things. One I've talked about with all the problems with ransomware and all the rest. You need to have a backup for your data, and it needs to be off-site. These people whose businesses have been flooded, computer equipment destroyed and all that, if everything is on-site there and you have no backup in the cloud, you have no way of figuring out who still owes you money. How much do they owe you? The basics of keeping cash flow to your business may have been flooded out for these people. That may be part of the reason 40% never reopen. So backing up your data is really, really easy. Remember, it needs to be off-site. So the cloud, where you store it with a Google Drive or Amazon or any of the places you can store your backup data. There are many competitors in that business. Have a backup because it comes into play so many different ways. I normally talk about how you should have a hard drive, an external hard drive to back up data in addition to using the cloud. But the thing is, that hard drive will be destroyed when the other stuff's destroyed at your business. If you had a fire, whatever it would be, theft, that's why you do both. You do the cloud and you do the external hard drive. These are very, very inexpensive things for you to have. But the primary thing that ends up eating up a business is you don't have the right insurance and or you're underinsured. If you own your own business and something happened, whatever it is, that put you out of business for a period of time, how do you reopen? How would you ever be able to reopen? Well, one of the things you've got to look at is interruption insurance. It's something that's very common that business lines brokers sell, but most small businesses never, either you're not aware of it or you never get around to buying it or you don't like the premium. But what it does in the remote situation where your business is shut down by whatever the calamity is, the business interruption insurance provides the funds to keep the business going as you go through the process of rebuilding or whatever it is you have to do. And if you own your own facilities, you know about, if you're in a flood-prone area, having flood insurance. But what if you're renting? Do you have a renter's flood policy? Most of the time the answer is no. And if you do have a disaster, remember, once your area is declared a disaster area, there are low-cost loans available to you for you to keep your business going. But one thing you should have, because many times there is no disaster area, it's a disaster that hit your own business. What lines of credit do you have for your business? Do you have a credit card that provides backup emergency funding for your business? What is it you have? What plan in place? I mean, I realize this is a very minimal list I'm talking about. All I'm trying to do is generate the thought in you if you're an entrepreneur. Because you worked so hard and risked so much to establish your business, you don't want to let one incident you haven't planned for destroy what you've worked so hard to build. Marcus is with us on the Clank Howard Show. Hello, Marcus.
Hi, Clark.
Marcus, you're thinking of being an Uber driver.
Yes.
Wow, I have done that for TV. I've done Uber and Lyft.
I know. I saw. I read the article. I didn't get a chance to see the video, but I saw your article on your experience driving for those guys.
Yeah, and by the way, those guys, you said it right. I'm a big believer that if you sign up for one, you should sign up for both.
That doing my research, that's the same thing I've been reading from a lot of people who've done it. That they take turns and use both of them at the same time to get the most bang for the buck, I guess.
And apparently, I didn't find any of these, but apparently there are apps that are specifically for drivers that help you figure out which is going to be more lucrative up to the minute for your availability. Are you going to be better off doing a Lyft ride or an Uber ride?
Right. I didn't know about those, but I hadn't heard you say that. I will be looking into them.
Yeah, the way you find out stuff like that is you find out from experienced drivers. So how can I be of service to you?
Well, I've run into a bit of a dilemma in my rideshare interest, I'll say. I was going to do it, and I wanted to make sure I want to do it correctly. I want to do it so that I have no liabilities and no risk. So I checked with my personal auto insurance company and learned that my policy prevented me from using my car for business purposes. And the only way that I could be covered, according to them, was if I switched to a commercial auto policy, which, of course, is a lot more expensive. I think it was, right now, I think I pay about $600 a year, and I was quoted about $2,000 for commercial auto policy on my vehicle. So that then kind of makes the dilemma, okay, do I want to pay that much just to try something that I don't like, or is there some other alternative that I could use to make sure I'm covered?
So this is something that the insurance industry has trailed on, and it is a problem for you with with the insurance, and if you go to Google or any search engine and you put in the question about insurance for Uber drivers or insurance for Uber and Lyft or whatever, there are so many posts about where people have gone to get insurance that permits it. And so there are insurers that have already adjusted. And Geico, which is a large insurer, familiar with Geico?
Yes.
Geico, are they the Gecko these days? Is that them? Anyway, they have a thing they've come up with that specifically is an add-on to your personal automobile insurance policy that allows you to drive for Uber and Lyft. A number of insurers have responded to the marketplace knowing that many Uber and Lyft drivers, it's a very part-time activity, and telling you the answer that you have to ditch a personal automobile insurance policy and get a commercial one is such a lame brain non-answer. It's ridiculous.
Well, Clark, I should offer one other small detail is that I did discover those policies that you're talking about, but it seems that North Carolina is one of a few states that haven't yet started allowing those kind of add-ons to personal policies, which is what seems to be the issue, which I find just ridiculous. I can't understand why they would have such a law.
So you're telling me your state has a law that you cannot have a rider that would permit this? I find that hard to believe.
I found it amazing, too. That's initially what the insurance company told me, and I really didn't believe it when they told me that. But I started doing some research, and actually after I called your hotline, and they got me in touch with my State Department of Insurance, and I called them and asked them the question, and they pretty much said the same thing. So just
crazy,
because I know so many people that are doing it here. So
well, okay.
How they're getting around it.
So here's the difference between you and most people that are doing something like Uber and Lyft or people that are doing Airbnb. Most people don't bother to inquire and find out what the risks are. So you're doing right things in the right order. And so it is a silly kind of thing that you have described in the state of North Carolina. It makes no sense at all. And the insurance marketplace should be left in position to be able to adjust to the new demands and needs in the marketplace. You know, you're covered while you're driving for Uber or Lyft with their $1 million, but it's only for the liability side. It would not deal with repairing your car if they said, oh, you weren't using it for a permissible purpose.
Right, exactly.
So you were a smart man to check on that. And the thing you've done, Marcus, also is regardless of what state you live in, if you're driving for Uber or Lyft, you need to know that you need the right insurance coverage while you're operating that vehicle for them. And again, many insurers offer the add-on rider for driving for Uber and Lyft. You know, when there's a disaster that strikes, you see the best and worst in people. In the recent flooding in Louisiana, we saw example after example of the best in people. So how could it be today's Clark-rageous moment?
Scams, ripoffs, outrages. It's a Clark-rageous moment.
So across Louisiana, it is so difficult for public safety officials to maneuver, and the fast-moving floods that swept away a lot of people's lives, but many more people's homes destroyed. People were saved by fellow citizens in what is called, in the area of the bayou, the Cajun Navy, where people with their fishing boats and whatever kind of boat they had went around and rescued people who would have drowned otherwise and saved people in huge numbers. It was an enormous example of citizens helping citizens. And I'm just so thrilled whenever I see that, where Americans step up to the plate and help each other and not wait for somebody to ride to the rescue. Well, now, in a stunning development, a Republican state senator from Louisiana has now announced that he's working on legislation that will require any of these people to pay a fee to be a rescuer. Now, I want to tell you, these are people out of the goodness of their hearts that go out at great danger to themselves and went out and saved other people, and now this guy wants to interfere with that and say, well, the state's got to have a fee for that if you're going to go out and save people. And you have to be registered. There's no chance this guy's not going to back down and say, oh, everybody misunderstood what I was saying, what I meant. Because instead, what he should be doing is doing picture-taking sessions and ceremonies with people who were out there saving others without concern for their own lives. You know, you'll hear me again and again. I am so touched by the stories where ordinary, everyday Americans put their lives on the line. Like I told you recently with the people who jumped on a subway platform in New York because somebody had collapsed and fallen on the tracks. And with a train barreling down, they jumped in without regard for their own safety and saved this person's life while other people ran down the platform waving frantically at the train driver to stop. This is the best in us. It's one of the things that makes us such a special people in America. And we have to remember to recognize the generosity and bravery, the selflessness that we as Americans show one for another.
Rocket Mortgage by Quicken Loans proudly supports this podcast. Rocket Mortgage brings the mortgage approval process into the 21st century. It's fast, powerful, and completely online. You see, Rocket Mortgage has taken all the complicated, time-consuming parts of applying for a mortgage out of the equation. Hate searching through stacks of old files and paperwork? Well, with Rocket Mortgage, you can easily share your bank statements and pay stubs at the touch of a button. It helps you get approved in minutes for a custom mortgage solution that's been tailored to your unique financial situation. Even better, with Rocket Mortgage, you can do all of this on your phone or tablet. It's a quick online process that you can manage from the convenience of your couch. So if you're looking to refinance your mortgage or buy a home, check out Rocket Mortgage today at quickenloans.com/save. That's quickenloans.com/SAVE. Equal housing lender, licensed in all 50 states. NMLSconsumeraccess.org number 3030.
I'm glad you're with us on the Clank Howard Show, where it's about you learning ways to save more and spend less, and don't let anybody ever rip you off. Off-air advice available to you for free as a service of the Clank Howard Show. Since 1993, we've offered free off-the-air advice where you can talk with a member of Team Clark. We do that 9 hours each day. You can see how to call in. Hours we're open at clark.com. CLARK.com. When you have a question for me you want for the show, go to clark.com/ask. I despise, I hold in contempt people that do payday loans. I cannot stand payday loans. They take people that are desperate and bury them in debt with an interest rate that starts at about 390%, goes as high sometimes as 1,100% to borrow money. And you think about it, who says, I can't wait to borrow money at 390%? Right. Nobody says that. And it is an absolute abuse of people, kicking them while they're down, these payday lenders. But they are very popular because a lot of people not able to access traditional bank credit or credit at a credit union turn to payday lenders to keep the lights on or to make a car payment so the car's not repossessed or whatever. And what happens eventually is you end up with no lights on, no car, and still a mountain of debt, because at an interest rate of 400 to 1,100%, the interest accrues so quickly that once in debt, you can't get out. It is such a despicable practice, people that are in a business like that. There are a lot of people who are trying to figure out a better way other than saying you can't do this. And I'm watching closely a company called Lend Up that is doing invites for something called the L card. The L card is for people who have no credit or have blown it with credit in the past. And the L card comes with an application fee that is something that has given some people pause. I don't care about it because the application fee, I think, is $60. But then the interest rate you're charged, and remember, this is only for people who have no credit or people whose credit's lousy. The interest rate you're charged is generally in the teens or 20s. Now, again, people who have good credit are not racing out to get a credit card that charges, 20%, 30%. But if the alternative is paying 400% or more, it is a real alternative. If you are somebody who would be tempted to get a payday loan and you can't qualify for traditional credit, go to lendup.com, L-E-N-D-U-P, lendup.com. You'll see in the middle the L card, and you can click on it and see their rationing invitations, see if you get one, and it may be a much preferable way for you to borrow money without ending up in the financial death spiral that comes with payday loans. LendUp also does something they call their payday loan alternative. You can see how that works as well. And I need more entrepreneurs, more capitalists, more reform bankers, people who got tired of working for the giant monster mega banks, to get out there and be creative and think of ways to serve people that the banks turn their backs on, and then you leave them prey to these wolves that want to destroy them, but on the way, get their claws in them. What do wolves do? Claws, teeth, whatever? Gosh, I never can do analogies, can I? Anyway, you get the idea. Somebody who recognizes the risk, charges you more, but doesn't rip you off like payday lenders do. The time you should take out a payday loan is never, 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 not ever. Boyd is with us on the Clank Howard Show. Hi, Boyd.
Well, hello, Clark.
How are you?
Doing well, thank you, and I appreciate this opportunity.
We're going to talk about the complete opposite extreme of credit, somebody who has an American Express card. That's a very different audience than what I was just talking about.
Yes, and I'm thinking of getting rid of mine, but I'm on my wife's account. We've been married for 30 years, and she's had the card or the account even longer than that. And I don't use it anymore because Costco won't take it. And I have other credit cards that I do use for my credit unions. And I just am curious if saving the $35 annual cost of the Amex card is worth it for potential damage to my credit score. Well,
that is a great question, and it's one that comes up frequently. What do you do with a card that has an annual fee that is no longer relevant in your life? So how many other major credit cards do you have? Visa, MasterCard, Discover. How many of those do you have?
I have one each of those.
So you have 3 major cards in your name?
Yes.
And on those cards, how much activity do you have in a month?
Oh, I rotate them, and probably 500 to 1,000, depending on activities.
Yeah, the reason I'm asking is I'm getting to the core of making sure that you have what's known as low utilization. Do you know how much the limits approximately are on those 3 cards?
They're pretty high.
Okay, then that answers the question, because what you want to do to have an ideal credit score, you want to use 10% or less of your available credit in a month.
Okay.
And so if you have high limits and very low use, you're likely below 10%. You never want to go above 30%. So if this American Express is removed from your mix, then your total available credit will decline, and that would have a negative effect if you were using a significant amount of your available credit. But if you're using minimal amounts, then getting rid of the Amex and saving that $35 a year would cause you no harm and would save you $35.
I'm all for that. And I try to pay off the other cards every month, and I rotate using them.
But it doesn't, believe it or not, it doesn't matter if you pay a balance in full or not for determining utilization. Utilization is based on the balance you have after your activity closes out, not that you pay that balance down to nothing.
Okay.
So that's the number that you want to be below 10%. Have you checked your FICO score, your credit score?
Yes.
And what kind of number do you have right now?
1 second. It's 765, I think.
Okay, 765 is a great score. So as long as you check through those cards and you see you've got a lot of room every month between the limit and what you're charging, you're fine to ditch American Express. David's with us. Hello, David.
Hello.
David, you were driving too fast.
Oh, no. Yes, I was, Clark.
What happened?
I had rented a car on a business trip out of state, and several weeks later, I got a letter in the mail from a company saying that I owed for the ticket that they paid on my behalf.
And was this a red light ticket or is this a speeding ticket?
This was actually a speeding ticket, Clark. It was a 44 miles per hour in a 25 mile an hour zone.
Wow. So the good news with that is that if that really happened, it's only an administrative ticket and not one that would generate points on your license.
Yes, I'm very glad about that for sure.
Do you think it really happened like they say?
Well, I traced it back, and I did rent a car. The only thing that could be an issue is that at my company, anybody in the company can drive the car that's rented, and there were others who were also in the car, but I would say 99% chance that it was I who was driving at the time.
Okay. All right. So are you just absolutely shocked that this has happened with the rental car, that they're coming back at you?
I really am. And the thing is, I also looked up this company that sent me this notice. It's not the rental car themselves. It's apparently a representative of theirs.
Yeah, they all use third-party companies. As an example, we get the calls from people who get the tickets from Europe, and the car rental companies, when they get hit with a ticket from a legal authority in Europe, they turn around and turn it over to one of these third-party processors that then adds on a junk fee and then comes after you like a collection agency to collect on the ticket. That's kind of how this works on this one, too, isn't it?
Yes, and I did see that there's currently a class action lawsuit against this company pending, and it's just based on the information I could glean from the Internet, they're expecting this to be decided sometime in September. So my question is, should I wait to find out if they've somehow violated some agreement, or wait to see what the outcome of this is with this class action suit?
That is a wonderful question. Here's how I'd handle it. You said you're not completely sure it was you. It could have been you. It could have been another employee. They have a dispute process. Dispute it and ask them for a copy of a photo of you, because those cameras usually also take a picture of the driver, and ask them for photo evidence that you were, in fact, driving this vehicle at the time. Mm-hmm. And that would buy you time till it would be clear what kind of settlement there would be. But to just put it on the back burner and ignore it, I don't recommend that. You should take some action.
Yeah, I'm concerned that it could reflect on me negatively at work because this is a business, and I'm renting cars constantly, week after week, and I wouldn't want them to somehow put me on hold.
Got it.
Of course, that would.
Got it. So that's why you respond under the appeal process they offer.
All right.
And I'm curious, how much is the ticket?
The ticket was $180.
For 19 over and a 25 in a lot of places in the country, and that's including their junk fee, right?
Yes, I think so.
Yeah, that's actually in so many jurisdictions, that would be like getting a 19 over ticket at a big discount.
I'll try to stay positive and think of it that way.
Yeah, because I'll tell you, I haven't had a ticket in a long, long time. And what was I was going 16 over, and the ticket was hundreds and hundreds and hundreds of dollars, not to mention what happens with your own insurance. Dean is with us on the Clank Howard Show. Hello, Dean.
Hello, Clark. How are you today?
Great, thank you. You want to talk about having a dedicated computer for your financial stuff?
Yes, that is correct.
Are you doing that? Are you thinking about it? Or where are you on this?
Well, I've just started considering it based upon what I've heard on your show in the past. I was thinking about getting an inexpensive Chromebook just to do my financials. Now, when I say financials, I do everything from online banking to stock trading, all the way down to ordering a pizza with my credit card. And I wanted to know sort of what the cutoff was or what the hierarchy was for using my desktop versus the Chromebook.
Definitely don't use the Chromebook to order pizza because it'll give you indigestion, because that's not the kind of transaction you want to cordon off. That kind of thing should be done on your regular computer or your phone. The kind of things you want to do are accessing brokerage, bank, bill pay.
Okay.
Even signing into your credit card company, you don't do that on the special financial computer. You do that on your regular computer. Because what you're trying to protect against is the risk not of somebody charging something against a card you have. What you're interested in is trying to prevent somebody from getting into your money.
I see. So it's more about identity than the actual credit card digits themselves.
Exactly. So you don't need to worry about, and you want no transactions of any kind other than bill pay on that segregated computer.
Okay, so just bill pay and stock trading, that sort of thing.
Right, exactly. And going to your bank account. You know, if you're signing into your online banking, you would want to do it on the special computer.
Okay.
And the great news is this is so cheap to do now, and Chromebooks routinely come in at like $99 to $129.
I've seen them, yes.
So it is the cheapest insurance an individual or a small business can have against people who would do identity theft. Never, ever, ever do any web surfing ever on that computer, Dean, and never go to email on there or social media. It's time for Ask Clark. That's where Joel reads a question you submitted at clark.com. Joel, who do you have a question from?
Clark Gellin from Johan. He says, I met with someone from a financial company. They suggested investing in a private 529 plan. Is this a good idea?
So that is a sales talk that some insurance companies have trained their insurance salespeople to use, and claim that buying particular life insurance policies is a superior way to pay for college than a 529 plan. It has been a real threat to the book of business for insurance companies that people that used to use insurance products to save for a kid's college now are going into the much more advantageous 529 plans. So that term private 529, that is just sales lingo, and you should not listen to that. You want to go into a state-sponsored 529 plan. I have a guide at clark.com, right where you posted the question, that walks you through how to pick the best one for your child or children.
All right, Clark, Diana wrote in. She says, I'm shopping around for a new mattress. Do you have any tips for me while I'm looking?
The mattress business has changed so much in the last 2 years that the traditional answers I gave based on Consumer Reports research of going to the original mattress factory if they're in your area, top rated by Consumer Reports, or buying a mattress from Costco, neither of those things are as relevant now as new manufacturers in the mattress business have opened it wide open with much cheaper and better choices.
You know, when you're going to buy a car, pricing information is great and necessary, but there's more to doing it than just the price. There's the actual buying experience. If you want to enjoy a better one, you should go to a True Car certified dealer. They're there to help you find the car that you want, and they're also what make True Car unique. With True Car, you can connect with a local certified dealer that you choose, so you can lock in a guaranteed savings off the MSRP and enjoy a totally better buying experience. And by better, they also mean faster. Over 2 million cars have already been sold to True Car users who have visited their True Car certified dealer. And there are over 11,000 True Car certified dealers nationwide, so it's probably pretty easy to find one near you. And check this, for a new car, average True Car users save $3,279 off MSRP. All right, so you're probably wondering, how do I do this? It's easy. Just go to TrueCar.com or, right there on your phone, download the True Car app. You can find the car you want, see the True Car pricing curve, which shows you what other people in your area paid for the same car, and that way you can know you're getting a good price and feel confident. Then you'll get a guaranteed savings certificate from the True Car certified dealer. Go to the dealer, and your guaranteed savings off MSRP will be honored, and you enjoy a quick, easy experience. How's that for car buying? So when you're ready to buy a new car, or even a used one, visit TrueCar.com or download the TrueCar app and enjoy the better car buying experience. Some features are not available in all states.
Here we are on the Clank Howard Show. What do we do here? Advice for you so that you can pack a punch in your wallet. I want you to learn ideas from me so that you can save more, spend less, and avoid getting ripped off. We're going to talk about a rip-off from Apple in just a second. Coming up a half hour from now, Target is having another of its periodic midlife crises and reporting bad numbers. I'm going to tell you what they've done that has annoyed so many devotees to Target, and I'm going to tell you what you can do about it in just 30 minutes. Our web address, clark.com. When you have a question, clark.com/ask. Apple allegedly has a flaw in its chip design and manufacturing process for the iPhone 6 and 6 Plus that makes the devices just a piece of junk. They no longer work. And there are reports both here in the United States and in Europe, one from Consumer Reports, another from the Guardian publication in England, talking about how Apple is aware of this. The employees in the stores know it, but the company denies that the flaw exists. It's referred to as touch disease in the company and also by third-party repair services that deal with these defective iPhones. And what happens is that after you use your phone for a while, there are problems with the touchscreen controller chips that eventually make the phone unusable. The screen no longer responds to your touching it. One of our staffers on the show had this problem, actually on our website, had this problem, and Apple denied it was a defect and said it was her fault that she had not taken care of her phone, that she must have dropped it or something. And this issue is so widespread, according to The Guardian, that every 6 and 6 Plus has this problem to some degree. It's just latent in most of them. Now, Apple charges a huge amount of money for their phones, $650 to $950. It is an ultra premium price in the marketplace, with the average smartphone that people buy $100 and some odd. At the prices that Apple's charging, they need to take care of their customers. You need to take care of people. You're sitting with the largest cash hoard of any company on planet Earth, and you're being stingy with your loyal customers. Fix the problem with touch disease. Own up to it and refund money to people you have charged to fix their phones. This is a very important time in Apple's history because, let's face it, Apple has had no product successes of any note equivalent to the iPhone, and other than providing backup storage, which has turned into a business in and of itself for Apple. And you depend on people coming forward with the new 7 Series to pay real money to you over again. Don't break people's trust and take care of them. By the way, if you have one of these phones and you're having touch disease, stand up for yourself. Hey, I didn't come up with a name for it. That's what it's called. And you rely on the published reports. Take them in with you. Say, look at this. Everybody knows this is going on. Fix my phone. Oh, but by the way, say it with much more politeness. You know, you never get anywhere when you get in somebody's face. You want to be assertive and polite, not aggressive. Thomas is with us on the Clank Howard Show. Hi, Thomas.
Hi there, Clark. How are you doing?
Great, thank you. You are buying your first home.
That is correct. My wife and I are hopefully going to be proud new homeowners, first time.
Well, great. Your timing is actually pretty good.
Is that right? That's great to hear.
Yeah. How can I be of service?
Well, I guess our question is more around the lenders and the mortgage rates right now, the interest rates. My wife and I have kind of been playing the field. We've looked at 2 rather large lenders and then 2 local lenders. But what I'm really interested in is I've noticed that the local lenders, I guess there's different types of local lenders. One of them happened to be a small bank that seems to sell my loan off once I've finished with them. So,
well, by the way, that is common, that loans will be sold after they're, let's say, retailed to you. Mm-hmm. Most lenders will sell off your loan at least to a servicer, and they'll show a sell-off rate. They disclose that to you. Was it show 99% or something?
Something like that, yeah.
Yeah, and that's how the business operates. Even the biggest lenders, even if they hold servicing, they sell off the loan almost 100% of the time also.
Gotcha.
So that's not different in most cases, except credit unions are more likely to hold loans in-house, what's known as hold in portfolio, than banks, which is why credit unions can offer a much wider variety of mortgage loan products than you'll normally find at a bank.
Very interesting.
So I wanted to ask you a question, though. Sure. Any of the people you're getting quotes from, are they mortgage bankers or brokers, or are you going to directly to lenders themselves?
I'm going to a mix. One of them seems to be like a middleman, where they're not actually loaning me the money. They seem to be almost I guess the best way to explain it would be like a literal middleman, where... Yeah,
that's what's referred to interchangeably as a mortgage banker or a mortgage broker.
Okay.
Even though they mean different things in the industry, people call them both of those, and it's really a good idea for you to talk with that person.
Okay.
Because they've got a variety of lenders they can approach and loan products based on your and your wife's individual situation and each of your credit scores. So Perfect. That's a good step. Are you a member of a credit union yet?
No, sir, I'm not.
All right. I would suggest that you and your wife go out and join maybe 2 different credit unions.
Okay.
and get quotes from the credit unions, because where credit unions 10 years ago were pretty much irrelevant in mortgage lending, they have become perhaps the most important source of good mortgage loans in the country.
Okay. And they usually service the loan as well?
Yes, credit unions, not always, but often will not only make the loan, but they will service it, and as I mentioned earlier, often keep that loan completely in-house.
Okay.
And all loan applications you and your wife do in a concentrated period of time count as only a single inquiry on your credit. So you don't want to, over, let's say, 6-8 weeks, just casually shop with different lenders and have one after another check your credit, because that will harm your credit. But when you're ready to get to the point where you know pretty much what home or homes you're targeting, you're ready to get the loan thing going, that's when you get loan quotes that are real ones from all the different sources you're trying.
Got it. Okay. And there's a difference between an official quote and just an estimate they would provide me?
Well, loan rates only count when they offer you the lock-in.
Got it.
Based on your and your wife's situation, and they have started the preliminary process of underwriting your loan, not full underwriting, and they lock you in a rate. That's the real stuff.
Okay. All right. Well,
are you buying new or used?
I'm buying a used house.
So you already know the house?
Yes, we have the house picked out. We've started doing our due diligence period. In fact, I'm on my way right now to meet an inspector.
Well, then you're doing everything right. And have you checked your wife's and your credit?
Yes, sir, I have. Unfortunately, I have the lower score.
Well, isn't that usually true?
I guess so.
Your wife's always right, right? Well, good luck with the home process, and I hope the mortgage thing at a time of great rates works out really well for both of you. Stephen's with us on the Clank Howard Show. Hi, Stephen.
Hi, Clark. How are you doing?
Great, thank you. You have a question about keeping or dumping a car. Is that right?
Yes, that's correct. My wife and I purchased our first home in April, and with this home, we don't need a second car because I don't need to drive to a bus stop to commute into the New York City. So right now, the car is basically just sitting in front of the house, not used, and it's paid off and everything. But right now, just paying like insurance on it and whatever else. But we no longer need it, and just looking for some guidance. First, like as far as car insurance, I think I dropped collision on it, and we just have liability. Is there anything else like you recommend doing in order to make the payment lower? Maybe raise the deductible or something?
Why keep it?
There's no reason to keep it right now. The only reason I'm not looking to sell it is it's not in the greatest condition. There's some cosmetic things as well as just some normal car wear and tear with it.
And what model year? What model year is it, Stephen?
It's a newer car, but I really haven't had much luck with it. It's 2006 Pontiac.
All right, 2006 Pontiac. All right, let me just tell it straight out to you. Yeah. Pontiac doesn't exist anymore, right?
Yes, correct.
And it's a 11-year-old model now that the 17s are starting to appear. So correct. It's heavily depreciated out, and exactly. I would say you dump it.
Dump it. Okay. I know I listened to you as far as I think I heard a caller previously say something about if you donate it. You were saying they don't give you a full donation. You have to prove the value of it or something.
Exactly. So, because so many people were gaming the IRS on car donations, new very strict anti-fraud rules went into effect that mean the reason you donate a car is basically out of kindness, not for a tax deduction. So what's a better idea usually if you want to donate money to a charity of your choice is you sell the car and then you donate the proceeds. And then you have no issue about how much deduction you're taking for a charitable donation. But an 11-year-old car, if you were using it even just on the weekends and it had a meaningful use to you, since it's fully depreciated out and has not much value, then I'd say keep it. But New Jersey, you have unbelievably expensive auto insurance.
Yeah, that's correct.
And I think the highest in the country. And to be paying those premiums for a car that sits out of 30 days in a month, how many does it sit unused, unloved?
We've moved in May, and I think I've used it twice.
Okay, that's your answer. The car, kiss that Pontiac goodbye. It's gone. You're done with it. It's over. Take a picture with it, because people later will say, upon a what? What was that? Matthew's with us on the Clark Howard Show. Hello, Matthew.
Hi, Clark.
Matthew, you got a Volkswagen diesel.
I do.
How's it been behaving?
I wanted your advice because I kept coming back to this question of what would Clark do in my position.
Well, what are you considering? Because now you got the offer where they've gone from the rope-a-dope to now they're offering the full red carpet, saying, you want us to buy it back? We'll buy it back.
Yeah, it's a really lucrative offer, in my opinion. It's really a good car, so we hate to get rid of it, but they've made such a good offer that I kind of feel like my hand is being forced here. But
that's a good problem to have. When does a company ever put out a defective product that they treat you as well as Volkswagen now, later in the process, but now is treating people who have Volkswagens? Which model do you have?
I have a Passat. It's been a great car. This is we've had a Volkswagen for the last 15 years, so we're very loyal to the brand, but they're offering me $28,216 to buy the car back, which is a 2013, and I
oh my goodness!
Yeah, I bought it for brand new for $30,700, and that was with shipping it all the way up here to Alaska. So
that's not a clerical error. That is so generous.
Yes.
You got to take the money.
Okay. Because I called my insurance company, and I was thinking, well, because I don't have to make a decision until December of 2018. And, being a Clark Howard fan, I'm like, well, shoot, I'm driving this thing till 2018, then selling it. But then I called my insurance company, and they said, oh, yeah, if someone hits you and totals it out, we're only going to pay you nada, whatever. And
which would be like half of what you're being offered.
Yeah,
right?
It's $15,000 or $14,000. So.
Take the money.
Okay, as soon as possible. Is that what you do?
Yeah, I would take the money and first figure out what you want to replace it with, and then get that money from them.
Okay. Well, good. If that's what you do, that's what I'm going to do. I got to wait till October to do it. But.
And you know what I can't figure out? What are they going to do with all these cars? Are they going to crush them? Did they say anything what they're going to do with them?
They sent me a packet, and they said that they're going to try to recycle as much as they can. But, yeah, it's a shame. I mean, it seems like some recalls that actually killed people have gotten off way easier than Volkswagen.
Well, it's because it was through and through corporate conspiracy. That's why, it's never the action. It's always the cover-up that gets you into trouble. Just read your history about Richard Nixon. You'll see what I mean.
Stay tuned for 60 seconds of AP News headlines right after this podcast.
Welcome to the Clark Howard Show, where it's about you learning ways to keep more of what you make. You can follow me at facebook.com/Clark Howard, our web address, clark.com, CLARK.com. You have a question, clark.com/ask. Or how about asking a question off the air? Do you know we make that available for free 45 hours a week, where you can talk with a member of our team? We've been doing this for, how many years is it now? 23 years? Almost 24 years we've been answering calls off the air for free. So at clark.com, you can see how to call in for off-the-air advice. Target, or Target to its aficionados, Target is having a rough time right now. And they are trying to figure out how to get the business having some momentum again. Target is looking not so hot right now. The irony is that not that long ago, Target was hot, Walmart was so not. Walmart seems to, at least for now, turned its business around, and Target is in the doldrums. There are times in a business people make a decision that in isolation seems smart, but if you miss the overall picture, turns out to be really harmful to your business. I call it the curse of the MBAs. And Target is finding itself in that position for having sold its pharmacies to CVS. You walk into a Target now, and it's weird. It's a weird thing when you look over and you see the CVS inside the store. And CVS is a very good operator, but charges extremely high prices for what they sell. And Target had a position in the marketplace with the pharmacy. They had their own private label over-the-counter items that aren't there now. And they had their special pill container that had a cult following. Don't know if you ever saw these things, but they were brilliant. It's so weird in business where people always imitate each other that nobody's imitated these really smart prescription bottles that allowed in a household to be able to say, oh, that's Jim's prescription bottle, or that's Mary, or whatever, because you'd see the color band for your stuff and the instructions on the bottles much clearer than anybody's ever done in that business. CVS, when they came in, instead of adopting those things, just, well, we're CVS, we do it this way. And they alienated that customer base in addition with the higher prices, and customers complain anecdotally, always got that one wrong, about having unfamiliar people behind the counter as there was massive turnover in employees. And here's the other thing. Remember what I said at first? CVS is about as expensive as you can get. Target was not the lowest price pharmacy outlet, but they were a discounter of prescriptions. And if you are someone who has traditionally gone to Target to get your prescriptions, this is your time to consider shopping somewhere else for those prescriptions, which only adds to the problems Target's having with foot traffic down, because a lot of Target customers have voted with their feet at the pharmacy counter, and they're saying nothing doing, and they're going somewhere else for their prescriptions, and then they're ending up with smaller number of visits at Target. And that's where the curse of the MBAs enter, because when people would come in to fill a prescription, what did they do? They then bought other things. Costco has that very active pharmacy in their store and sells prescriptions overall cheaper than anybody else. Not every prescription, but overall. And it doesn't even matter if they lost a lot of money on the pharmacy. Who knows if they break even, make money, whatever. But it brings people in, and while they're waiting for the prescription, they fill up those giant baskets, as people call them in some parts of the country, buggies, with all the things. And it's a business model. How Target missed that, I don't know. But for you, if money matters to you, you need to look for your new place to get those prescriptions filled. Again, CVS is a well-run business. They're just very expensive. Patty's with us on the Clank Howard Show. Hello, Patty.
Hi, Clark. It's a privilege to talk to you.
Well, it's great to have you here, and I did an aside about Costco, and you have a beef with Costco right now.
Yeah, well, I got their new Costco City card in June when they made a transition. I've been using it for a couple months with no problem at all. And then 3 days ago, I had an alert that I had fraudulent activity on it. And so I called and got those fraudulent things canceled, and they said they'd cancel my account, send out a new card, express, which they did. And so I received my new card yesterday, and I went to activate it, and it had all my information on the front. When I turned it over to get the security code on it, it had another Costco member's picture and all of their information on the back.
Oh. Krista, didn't that happen to you? Something like, not that your card was fraudulent.
No,
but
I had
you
the wrong
something.
membership number on it. And at the warehouse, they told me it happened to a lot of people. So
there's something wrong with Citibank's database. What happened when you called them and said, hey, when you sent me your replacement card, my replacement card, you put somebody else's picture and member number on the back, but my name on the front? What's the deal?
So I called them, and the first guy didn't know what to do, so he transferred me to somebody else. And they said, well, that's not something we can help you with. You need to go to Costco to take care of that. And so just today, I went on Costco's website, and I found a number where to call for that. And I called. Well, they said if it's the wrong information on the front, then it's Citibank's problem. But if it's on the back, then Costco needs to take care of it. So when I called, I got transferred to Citibank again, and I said,
why don't you go into the store?
Yeah, that's what I was going to do. I just thought before I went in, I'd look and see if there was anything online.
I think that's the right thing to do. You know, so look at the situation here. You have a company that has one of the best service reputations in the country doing business now with a giant monster mega bank, and giant monster mega banks have just about the worst customer service in the country. So you have two entirely different cultures on a co-branded product.
Well, when I did get transferred to them, I got somebody who was really nice and really helpful, and they said they would just go ahead and send out another card by express mail and see if I got the right information this time. So I thought maybe I would wait and give them one more try, and then if it doesn't,
oh, that's funny.
Will definitely go into Costco and take care of it.
All right. If you get the wrong card a second time, I'd love to get that feedback from you.
Okay. It's a little disconcerting, though, wondering if somebody else has all of my information, my membership number, and my picture and everything on their card.
Yeah, but you want them spending on your membership because you'll get more cash rewards for them doing that.
Well, that's true. Yeah, that's true. And this was an MD on the back of my card, so a business executive member. So I thought, wow, maybe they will get me more cash back.
That's funny. Well, it's funny, not just what you said, but the situation isn't funny at all. Costco's had just so many nightmares being in partnership with Citibank that hasn't had its act together. The CEO of Citibank has apologized and said they're going to do better. They should have been ready in the first place. 60 million people. Come on. Andrea is with us on the Clank Howard Show. Hello, Andrea.
Hello, how are you?
Great, thank you. You sold a home in California, so that means you are a billionaire now?
Well, not quite that good, but, we definitely bought at the right time in a very desirable area and made some really smart investments on some renovations, and, we'll be coming back cross-country home with a little bit in our pocket.
There have been people who've been doing that play where they've been selling a home in California, and then because they're at retirement or whatever the situation is, they're moving to a low housing cost state, and it's a one-time booster shot to your finances that it can be monstrous.
Yes, definitely. I mean, we definitely feel fortunate that we made some good decisions, and we are pretty young, but we want to take our time finding our new home and kind of wondering where do we park the money in the interim? What's a good kind of investment that
you can't invest it if it's an interim period? Are you looking at buying a home in the next, let's say, 1 to 5 years?
Yeah, definitely. Probably 6 months or less.
Oh, okay. Then
Ideally.
No investing at all. All you can do is stash the cash in an online savings account and earn a measly 1%.
Okay, that's what I thought.
You cannot invest when you're looking at a period shorter than many, many years, usually at an absolute minimum, a 5-year period, because the very nature of investing, there's too much risk you could lose money. And you didn't make all this money from selling this house in California to then lose a portion of it in the first 6 months after.
definitely not. Now, would you put all of it towards a new home and have almost no mortgage, or?
Well, I hate debt. I mean, I truly despise debt. I carry no debt at all. No mortgage debt, no debt of any type. Okay. And if you have the windfall that allows you to live potentially mortgage debt free,
yes, sir.
What a deal. Do you have other debts in your life?
No, sir, we don't. We've done a very good job of not living beyond our means. So owning a house free and clear that is yours and owning everything else free and clear means that every dollar that would have gone to loan payments of various types is money that you can each month put into a Roth IRA for each of you, or increase what you contribute to a 401k, or who knows what. It allows you to live a much lower voltage life with a lot less risk. Okay.
So,
well, that's what we were thinking, but we definitely, appreciate your input.
And go to bankrate.com and click on the best savings rates in the country to see which of the online banks will give you the best deal on that money. And did you clear more than $250,000?
Close.
Okay. The reason I asked that is you wouldn't want to put more than $250,000 in a single online bank.
Okay. Yes, to be FDIC insured.
Exactly. So those are really, really great problems to have, that after you pay off a mortgage and all that, you still cleared that kind of money. Joel, let's see if we can sneak in and ask Clark here.
Sure, Clark. Craig wrote in. He says, I'm in the market for a new flat screen TV. Do you have any advice on where I should look to get the best deal?
The deals are so great. And football season upon us. That's why you see the ads for the TVs everywhere. My best advice to get the best deal is buy a no-name TV. Not so much the store you buy it at, but that you buy what's called a third level or white label TV brand that is, who knows what brand it is. The reliability of the TVs has been so good across brands. Buy cheap, biggest screen size you can fit in your house. Gwen is with us on the Clank Howard Show. Hi, Gwen.
Hi.
Gwen, you have something going on that is no fun at all. Tell me.
Well, my husband and I, we have our house on the market, and we've had it on the market for about 40 days. We haven't decided whether to buy or rent after we sell this home. So I've been browsing several different websites, and I ran across a website that actually had our house on it, and it said that it had several phrases next to the house, the picture of the home. It had that you could have bad credit approved and get this house. You could get this house for 20 to 50% off list price, and that you would make huge savings by going through this site. Well, I went to the terms of agreement on the site, and I read the material there, and it said that all the material on the site was owned by that company. And I was wondering, how could they take the picture of our home and all the information and put it on their site as though that they could sell it or rent to own it or whatever they could do?
All right, well, let me tell you something. This is a terrible, terrible problem. There are crooks that are taking legitimate real estate listings from any legitimate site. It could be even the one that is for the real estate agents. It could be Zillow. It could be Redfin. It could be any of them. And they duplicate all the pictures. Did you find all your pictures on this? Yeah. They duplicate everything, and then they create a parallel listing that is completely bogus and try to steal money, usually with either having it on a rental site, or in this case, it's rent-to-own kind of thing. And it is just con artists who pretend they are the owner of your property. And are you occupying your property?
Yes, we are.
All right. You are not a likely target for this. Usually the criminals target vacant homes.
Yes.
And they may even come and change the locks.
Wow.
And they'll have a locksmith meet them and change the locks, and then they'll have prospective supposed tenants meet them there, and they'll sign the lease or sign the rent to purchase deal, and people move in not having any idea that they rented from or entered into a rent to buy thing with a scammer.
Wow.
It is the greatest loser in this is not you trying to sell your property. It's the person who gets conned into paying money to someone who's just a crook. And in your case, you would not get hurt like someone would with a vacant home because nobody's going to come and move into your home.
Yes. Well, the other thing that they had on their website was that they offered a 7-day free trial to use the website, and then afterwards your credit card would be debited $49.95 if you did not call them and tell them that you did not want to use it. And I think that that's really where they're making their money.
Well, the website is not, as best I can tell, the website is not the crooks. The crooks are using the website to steal money from prospective, desperate homeowners.
Okay.
Because there are many, many places these phony ads are being posted.
Well, is there any way that we could have do I go through their contact us and ask them, how would I approach them?
Well, let me tell you what we're going to do. We're going to check to see if this particular website is, in fact, a crooked website itself, or if they are, in a sense, an innocent party also.
Okay.
And so I'm going to put you on hold because we're going to get back with you about that.
Okay.
And so the good news, nobody has shown up at your door with a moving truck. And not likely to happen since you are owner-occupied.
Thanks for listening to the Clark Howard Podcast. Download new episodes every Monday through Friday at podcastone.com. That's podcastone.com. Stay tuned for the latest AP News headlines from Podcast One, right after this.
When shopping for car insurance, consider this. Geico has been saving people money on car insurance for over 75 years. So if you're serious about savings, it's simple. Go to geico.com. After 75 years, they know how to save you money.
AP Update, I'm Ross Simpson. No fatalities and no serious injuries were reported after multiple tornadoes touched down late today in central Indiana. They tore the roofs off of apartment buildings, sent air conditioners falling onto parked cars, and cut power to thousands of people. The mayor of Kokomo, where a destructive tornado touched down, says city's crews remain on the clock tonight cleaning up storm debris.
A lot of the trees fell in some of our major thoroughfares, and so they're working to clean up those areas, make them passable.
Governor Mike Pence says he will tour 2 storm-damaged counties tomorrow to assess the damage. The GOP vice presidential nominee says he will remain in the state as long as he needs to make sure that Hoosiers who have been impacted by these storms have all the support they need. AP Update, I'm Ross Simpson.